let's talk about the fixed income arena. It is a concern. We're looking at quantitative easing and what, when, where will the Fed take a step back. You know what I find interesting? What the Bank of Japan did. Boy, did they take a page out of the U.S. playbook.
Without a doubt, and it's a wonder that now the issues that we're facing now their currency has been completely destroyed this past year, and it's really parked a lot of returns into some of these products that have been domestic currency
and
products.
The Nikkei had a great first quarter as well. But looking ahead at I think what you would say is the biggest concern for investors is interest rates. Brian, what do you think the outlook for rates are for the next quarter or two?
It's hard to tell. With the move recently, it seems like we were headed one direction and we've come all the way back down. The 10-year went from around the 1.8 range to above 2. And now we're back in the 1.7 to 1.8. A lot of forecasts have been calling for somewhere between the 1.8 and 2.5 range at the end of the year. But with the volatility in there, you really need to be mindful of that swing and how it affects your portfolio and the prices in it.
And with growth and inflation staying fairly nascent, I don't know that we're going to see the higher end of those.
I think people got a lot ahead of themselves in terms of the rate market because, as you just alluded to, and we've made some adjustments from the duration standpoint that have played out pretty well for us this year. But looking at the housing market, the improvements we've seen there, I think everyone's expecting this to happen, and it's not happening yet.
What are you more concerned about, duration or credit?
I don't think credit's the main concern here. Just the way that the markets have gone in the last couple of years, credit's been kind of the go-to area. People have dropped off some of that concern. That's where returns have been. The concern right now is really the rate side of it and what's going to happen with the Fed. It seems like we've kind of reached the end of what they can do to aid the economy. The training wheels have been put on. How long are you going to keep them on, and when are they going to be taken off is the question now.
We're waiting to see if the economy kind of catches on its own. And with the recent job data, obviously a very important data point for us at Astor. Today's number, Brian, a surprise, a shock, within the realm of expectations?
Well, I think, again, it boils down to everyone expected a weak first half of this year. Got a little ahead of ourselves maybe in the data standpoint, but you add in those revisions from last 2 months.
Just going to say, can't ignore the revisions.
You get 150K. We were talking about GDP from the fourth quarter. We didn't believe that. The third quarter didn't believe that. It's the average of somewhere, and I think these numbers are continuing there. I just think everyone was getting ready to say, finally, yay, we're there, and it just isn't quite there yet.